Hello guys, this is FairBinaryOptions.com, and it is like the title of this analysis suggests, or the name of this analysis suggests, it is make or break time for the euro US dollar, not necessarily because markets are at the crucial point, but I would say that the all-important non-farm payrolls, the jobs data in the United States is coming, and euro dollar is most likely to react to it as any other currency pair. Now I am saying that it is make or break for the pair in the sense that we have two scenarios but based on the same pattern. The pattern is being called the contracting triangle. Now the thing is how this contracting triangle is actually going to break. Is it acting to be as a continuation pattern? Look at this previous trend. So we have a trend, or let's say a move to the upside. This one here, that has some problems. First of all, if you take a trend line from the lows here to the highs and look at it like this, so if you take this trend line and you'll make it like this and then clone it and put it like this, you see that the pair actually it is channeling too well. It is traveling in such a way that the corrections within the channel are almost the same, and this spells trouble for the bulls. It means it is a corrective wave, a three-way structure. Alright, but then we have what? We have a series of, so this is a high, but this high should not be considered from here. This high should be considered from here. So we have a high, and then we have another high, but as you can see it is a lower high when compared with this one. And now yet again, after the month end flows from yesterday, we have another lower high. This is being called a possible triangle, and if this is a continuation pattern, then the triangle should look like this. I mean, this previous trend should continue after the triangle is going to break. Or if it's going to be a reversal pattern, then we'll have A, B, C, D, E completed, and it should move here. So what I would like to do is to go and take a polyline and with different colors to place different scenarios and what to do when and if price is breaking into a direction or another. So I would say that from this moment of time we might look at a contracting triangle that actually goes like this. This to be wave A here, B wave here, C wave here, the D wave here, and the E wave here, somewhere like this one, I don't know, 138, 30, 40 area, and then to break higher. So this would be our bullish scenario, and for this bullish scenario the outcome normally should be to go and buy call options. So whenever you're looking for price, or whenever you're looking at price to break to the upside and you're trading binary options, then the outcome should be buying the call options. In this case we are looking at a triangle that is traveling between the A and C and B and D trend line. So the B and D trend line should be not this one from here, sorry, but the B and D trend line should be this one from here to here, like this. Let me make it black, or I don't know, red. No, not red, because with red we'll do the bearish scenario. Blue, like this, and the A and C trend line would be this one. So this is very much valid for what's going to happen for the euro US dollar as of starting with tomorrow with the non-farm payrolls. Bullish price action. So normally we should buy call options in this scenario when price goes into the 138.38. So this should be a nice place to go and buy call options with end of day expiration date on Friday. And then as we move on, we will look at the B2D trend line to be broken, and if and when the B2D trend line to be broken, we will add another option to trade. If it's going to be next week, then we will add end of week expiration date and so on. However, there is another scenario here, and this is based on the fact that the contracting triangle, the move here ends with this contracting triangle, which usually is a corrective wave. So it might be that from here this to be an X wave, and from here to have the following situation. Like this to be wave A over triangle. Then the B wave to come here. I will put it here so that you can see the difference. Then the C to come here. Then the D to come here. Then the E to come here. And just like that, the contracting triangle is completed. And it is completed, let me make it red. And it is completed A, B, C, D, E. In this case, the A and C trend line is this one. So I will make it, I don't know, let's make it pink. And of course, the B to D trend line is this one. And in this case, all eyes are going to be on a break of these lows. So I would say that we are in, let's say, difficult situation to trade. For the ones that are more risk, let's say risk taken or risk takers, my advice will be to go in any 38.30, 38.40, 38.20 area to buy call options with end of day. But if price breaks this level here, something like 38.14, as you can see, 38.10, or maybe even these lows here are 37.77, then just going on the short side or buying put options, because this triangle is not going to go higher anymore. Two triangles, two patterns, only corrective waves between Easter and May Day and the Labor Day and vacations and holidays, and before the ECB tomorrow, the ECB next week, I would say still consolidation to come. Let's hope that the non-farm payrolls will bring the volatility or the much expected volatility. Thank you very much. Have a great day. Bye bye.